Let us see the next question. You do not have to write anything. Let me explain to you. The following is the balance sheet of Grapefruit Company Limited as at 31st of March 2016. Equity share capital is provided to us an amount of rupees 600 lakhs and the face value is rupees 100. It means that the 6 lakhs equity shares having face value of rupees 100. 14% preference share capital of 200 lakhs. So it is 2 lakh is the number of preference shares and 100 rupees is the face value. 13% debentures. Debenture interest accrued and payable 26 lakhs. Loan from the bank 74 lakhs. Trade creditors is 340 lakhs. So the total of the liability side is 1440 lakhs. On the asset side, land and building is given, plant and machinery is given, furniture and fixture is given, inventory stock is given, debtors, cash. Highlight the portion. Preliminary expenses have been given to us an amount of 10 lakhs. Cost of issue of the debenture is given 5 lakhs. Profit and loss account is given 525 lakhs. We understand that say the profit and loss account on the debit side is indicating the loss. The company did not perform well and suffered sizable losses during the last few years. Yes, we can see that there is a loss. However, it is felt that the company could be nursed back to the health by proper financial restructuring. Consequently, the following scheme of the reconstruction has been drawn up. Highlight the portion scheme of reconstruction. Equity shares are to be reduced to rupees 25 per share, fully paid up. You do not have to write anything. Let me explain to you. Dear students, we can see that say right now the face value is 100 rupees per share. From 100 it will reduce to 25. So it will reduce by 75. So we understand that say there is like capital reduction account we can prepare. Wherein the equity share capital account debited, that is an amount of 600 lakhs, to equity share capital account 150 lakhs, that is the new equity share will be issued having face value of rupees 25, and the remaining 450 lakhs will be transferred to capital reduction account. So over here I am writing by equity share capital account. Next, the preference share are to be reduced with a coupon rate of 10%. Right now the coupon rate is 14%. So the 14% preference share capital account will be debited, an amount of 200 lakhs. New preference share capital account will be credited, wherein the rate of preference share will be 10% to equal number of the shares of rupees 50 each, fully paid up. We can see that right now the preference share capital is having face value of 100. So what will happen from 100? It will reduce to 50. So preference share capital account debited to preference share capital account to capital reduction account. That is an amount of rupees 100 lakhs. Next, debenture holders have agreed to forgo the accrued interest due to them. You can see that the debenture interest is provided to us 26 lakhs. So debenture interest account debited to capital reduction account an amount of rupees 26 lakhs. So over here by debenture interest an amount of rupees 26 lakhs. Next, trade creditors will forgo 25% of the amount due to them. Trade creditors amount is provided as 340. So into 0.25, that comes to 85 lakhs. 340 into 25% is 85 lakhs. So trade creditors account debited to capital reduction account an amount of rupees 85 lakhs. Next, the company will issue 6 lakh equity shares of rupees 25 each, and entire sum was to be paid on application. Means bank account debited to equity share capital account. It is 6 lakhs into 25, 150 lakhs. The entire amount fully subscribed by the promoters. So this information is basically of no use to us, because ultimately the promoters are only required to show the interest that they want to continue with the business. Land and building was to be revalued at 450 lakhs. Right now the land value of the land and building is 200 lakhs. So what will happen? Land and building account debited to capital reduction account. So over here we will have by land and building 450 minus 200. So there is an upward valuation by 250 lakhs. Next, plant and machinery was to be written down, highlight the portion, by 120 lakhs. What is the amount by 120 lakhs? Means now there is a utilization of the capital reduction account. So capital reduction account debited to plant and machinery, because we are going to write it off. It is by 120. So what is the current value? With that we are not concerned. Right now it is of 300 lakhs. That's okay. Next, and provision of rupees 15 lakhs had to be made for bad and doubtful debts. So this time 15 lakh rupees is required to be provision. So again the capital reduction account debited to bad debts reserve, an amount of rupees 15 lakhs. No further adjustments. However, we understand, of course, that say these are these preliminary expenses, cost of issue of debenture and P&L, all of them will be written off in this capital restructuring. So over here, two preliminary expenses, an amount of rupees 10 lakhs, to discount on issue of debenture, an amount of 5 lakhs, to P&L account, an amount of 525 lakhs. This is the way we are supposed to write all the balances. Now we understand that, say, use your calculator. 450 plus 100 plus 26 plus 85 plus 250. So the credit side total is 911. 120 plus 15 plus 10 plus 5 plus 525. So the debit side total is 675. So what we will do, this is 911. 911 minus 675. So 236 lakhs will be transferred to capital reserve. This is the way we are supposed to say prepare the capital reduction account. The first part of the question, show the impact of financial restructuring on the company's activities. Means you are required to prepare simple capital reduction account. Second part of the question, prepare fresh balance sheet after the reconstruction is completed on the basis of the above proposal. So what will happen, friends, over here? The revised balance sheet will be like this. Instead of 200, it will be 450, because that is upward valuation. Instead of 300, this will be 180. No change in the furniture, no change in the inventory. You can show the debtors net of the provision, or you can mention over here bad debts reserve, an amount of rupees 15 lakhs. Cash and bank will increase. Why? Because we understand that, say, the company has issued 6 lakhs equity shares at the rate of rupees 25. So 150 plus 130. So this will be 280. These balances will vanish because we already have written off. As far as the equity share capital is concerned, we understand that, say, we had reduced it initially to 150, and then again we have made an issue of 150. So this will be 300 lakhs. This is reduced to 100 lakhs. No change in the debentures. As far as the debenture interest is concerned, it will again not appear because we have written off. They have agreed to forgo the debenture interest. The rate of preference dividend will be 10%. Loan from the bank, no change. 340 into 0.75. So because 25% they agreed to forgo. This is 255. This is the way we have to prepare the balance sheet. So friends, it is exactly the same that say we were doing a kind of capital restructuring. There is no change in it. A kind of capital reduction account that say we used to prepare, exactly the same thing is here. I have provided an answer for this to you ready-made, wherein we understand that so the reduction in the liabilities, reduction in the equity share capital, that is 450, preference share capital, debenture interest, trade creditors, so total 661 reduction of the liability. This is revaluation of the land and building. So this is the credit side of the capital reduction account. We are going to use it to write off these three first of all. First is the P&L account, next is the cost of the issue of the debenture and preliminary expenses. Bad debts reserve, plant and machinery. So this is what we have used. And this is the transfer to the capital reserve. Balance sheet after the reconstruction. 150 plus 150. This is half from 200 to 100. Capital reserve 236. 9% debentures, say it is say 200 because the rate of interest has only changed. No interest due. Loan from the bank as it is. This is reduced by 25%. Land and building increases. Plant and machinery reduces. Furniture no change, stock no change. 15 is a bad debts reserve. Cash and bank balancing figure, or we can compute also as 130 plus 150.